Thanks again for coming back. It's the beginning of the month, which means we're here talking about last month's stats. As soon as we can get them, we analyze them and we get them back to you in our way. So last month I put a headline called, "Is our market as cold as the weather?" Right? I think we can all remember it was very cold, but it turned out the actual market itself, the real estate market, wasn't. There was nothing negative going on, give or take, that I needed to discuss. So that was a good thing. We were still feeling out how we would come out of the gates from 2017 and come out of the gates from December, which is a very sleepy month. But basically what happened last month in January was there was no indication yet about what was to come. But here we've got a little bit of a different story. We are seeing some trends that might possibly be here for a little while. And those are the things that I'm going to dive into today and point out today. So let's go. Let's get to those points. If you are watching the real estate headlines, what you're going to hear or likely hear is something to this effect. Housing prices are holding steady, but sales have fallen or are falling, right? That's going to be what you're going to read when you're looking at different headlines, different media outlets. But let's dive beyond this a little bit. Fact, sales in February were 18% below what occurred in 2017 at this time of year. So that's fact one. Fact two, we still sit substantially below long-term normal sales activity for our areas. So those are two facts. We can't avoid those. But as we know, real estate can't be talked about in this big macro holistic way to get you guys the most value and understanding of what's truly happening. So again, let's dive again a little bit further behind the headlines, behind those two major facts that a lot of people are going to talk about. So let's dive into the detached market. It's seen the largest drop among all the different property types, so that's detached, apartment, and attached, in sales year over year. We sit about 20% below sales activity that we had last year, so that's a big change. Now on the other side, it has the highest bump in inventory year over year with 23% year over year than what we had last year. So sales drop by 20, inventory up by 23. Now, as a result of both of those things, the months of supply, which means how long it's going to take to get through the current active inventory, has actually jumped a full 50% from where it was this time to last year. So this time last year, we were sitting at 2.4 months of supply in the detached market. Now we're sitting just under 4 at 3.7. So a big change. So all of this doesn't sound very good, does it? But the big but here is prices are holding. That's a good sign. And if we look at the benchmark price, they're actually slightly up year over year. So there is no need to panic. Now, the other thing about last year, when we're comparing all these numbers to last year, and there's this big difference, is because last year at this time, we had this mini seller's market. It kind of came out of nowhere. It was unexpected, and actually a lot of people completely missed it altogether. But for a few small months, there was a mini seller's market that quickly went away. So our data for detached is actually a little bit skewed. So I would suggest on an annualized basis, year over year, we're probably not that much of a drop like I was just talking, those 18s and 20s. Those are big numbers. Now, let's go over to the apartment segment quickly. Sales are also down, but 16%. New listing inventory, though, is actually down from the same time last year. We're detached, we're way higher. On the apartment market, which has been beat up for the last couple of years, inventory is actually down 7% from what it was last year. So that's a good news story. So overall, we're not seeing near the same swing change that I just talked about above, about the detached market in the apartment segment. However, despite all of this, it's still recording a small It's a 3% year-over-year decline in the benchmark price for apartments. So not quite out of the woods yet. Now the attached market, the third one I want to talk about. Sales are down the least of all three markets, only down 13% year over year. Now new listings are also down just a little bit. So now out of the three, we've seen detached market, it's had a big bump in inventory over year, but both now the attached and the apartment segment have seen inventories drop. Inventory as a whole sits, reading that. So all of this sums up that in the attached market segment, prices are again maintaining themselves. They're holding. Now again, as I discuss every month, attached is broken down into two things: row homes and semi-detached, like the infill product. Of the two, row homes this month performed a little bit better due to they've had a better drop in inventory over last year versus the semi-detached. They've actually seen a very substantial increase in inventory over what we had. That likely means developers had some confidence at the tail end of last year and have now put a lot more product on the market for us between that 600,000 and 999,000 range. If we looked a little deeper, that's probably what we're going to see. So it's not unexpected when there was some bit of confidence, because those investors, those developers are willing to put some money forward and to build out the specs. So yeah, I'm going to, however, before I move on, I'm going to pull up a few graphs that I think will paint this picture and kind of paint this overall macro picture a little bit, and it'll cue us back to what I wrote as our market update title, which is, we're at the tail of two different extremes. So I'm going to pull up the first graph, which is going to be the sales graph. So the lowest sales graph. I'm going to pull this one up. So if you look at this, we talked about year over year sales numbers being a little bit less. Now I wanted to see, okay, well, less than what, right? 1 year is good to talk about. Yeah, that's the right one. 1 year is good to talk about, but let's look a little bit further, because that's not painting the whole picture. So you see this red line that I've drawn all the way across. And what do you notice here if you look at this closely? Is that right now, February on the far, far right, 2018, if we compare it to every other February in the last, unfortunately, 15 years, we're sitting at the lowest sales month that I've seen. So you wouldn't think that's a great news story, and it's not. It's coming out slow, and I think what we're seeing here is there's this spillover from, the interest rate potential changes, the mortgage rule changes, and probably a little bit better of a January than we expected. So we're going to take that graph down. Now that's one extreme. We don't want that one.
Sorry.
Now, that's one extreme, the lowest sales. Now let me flip over to the inventory graph. Exactly. Yeah, so this is total inventory. Now again, look at the red line across the board here. And what I want to show you is, despite having the very, very low sales activity, I've told you that for the most part, we're holding our pricing. Now we're doing that because if you look across this, over this last decade, there's a lot of ups and downs here, but if we average things out, we're right about where most of the decade has sat, give or take just a little bit as far as our inventory. So despite sales being, more or less, the worst in 15 years for February, our inventory is about the same. Now, if inventory was way higher, that's where we'd see some concern, and that's where we'd see some issues with potential declining prices. So yeah, that's something for you guys to know. Now, the other flip side to this coin is, here we go. There's a new listing. So do you see that one, Dave? There's the third graph I want to show you about inventory. Low inventory. The second one.
This one.
No, next one. That one. Okay, perfect. This one, guys, tells a slightly different story. So the last graph was about total inventory. This one is about new listings. This is new listings in February. So again, why are our prices holding despite the sales being according to that graph, the lowest in 15 years. It's because of this. So now on the other extreme, we're the lowest new listings than we've had in a full decade. So that arrow points to us now here in February. But every other year-to-date total for new listings over the last 10 years has been higher than where we sit today. So again, as long as that continues to be a little bit low like this, and if sales don't pick up, which they may or may not, we're gonna be okay and prices will stay there. So that's gonna be enough for the graphs for now. So hopefully that gives you a little more perspective rather than just the language that I'm using. Now, if we look to specific price ranges, which ones are performing well, which ones are performing maybe not so well. And when I look at things, I look at it year over year, but I also look at it from January to February, and then onward, we're gonna do February to March as we go. When we look at it, you'd expect February's numbers to be better than January. That's typically what happens as we ramp up towards spring. But when I look at things, all markets from 200,000 price point all the way up to $999 actually saw a decline in February over February sales. The only markets that actually went up were the luxury price points, the million all the way up to 3.5. That entire market segment actually saw year over year increases from February over February last year. So that's interesting to know. Now, if I were to look at that other thing I mentioned, which is, hey, how are we doing now in relation to January? It's supposed to be going upwards. When I look through this, and I've made some notes around this, almost everything is trading up in February over January. So that's good. That's what we want to see. Sales came down year over year and we're lowest in 15 years, but we're still seeing progression as we go from January to February and onward to hopefully a reasonable spring market. Awesome. Now, what does this mean for the three different people that potentially are watching this update and want to know about real estate? We've got buyers that are currently looking or are going to be about to start buying. We've got sellers. And then for the majority of us who are not trading homes right now, the general greater Calgarian, what does this market mean to us? So let's start with buyers. So right now, due to that current low sales figure we talked about, you're in the power position as a buyer. But I want you to remember something. The new inventory has yet to ramp up. Like you might think that's going to start to happen yet. So that will hold sellers tighter on their price, even though sales are low, because they don't have that massive inventory yet to compete against. So yes, you're in the power position, but sellers aren't forced to make that change. So if you want to take advantage of this low sales kind of bottom, you have to act quickly before the spring market comes upon us, because we don't know what's going to happen going forward. We don't know if sales are really going to pick up. So right now you're in this sweet spot where you're in power. So go out and take advantage of that, because it might not last very long. Now for sellers, on the seller side of things, the silver lining right now for you is inventory. Inventory climb is the lowest in a decade, so that's allowing values to hold despite your sales. This, though, again, won't likely hold as we enter spring. I'm going to pull up another graph here to kind of discuss that. As we enter spring, and if inventory starts to climb, you're going to be in this place where you have a lot of competition. And I think I might have shown this graph somewhere down the line in last year, but I'm going to bring it up again because I think it's very important. This is the cost of overpricing. So in a shifting market is what we're in today, in the sense that, there's not a lot of positivity and likely there's a bit of a shift downward. We're talking about inventory being low and things like that. So there's a cost to overpricing for you as a seller. As inventory is about to ramp and sales are very, very low right now, you need to be very considerate of your initial launch price to the market. If you start too high, you're going to have a hard time catching the market as the market interest drops away from you. So just be very careful with that and don't get, I guess, overzealous thinking that you can price it above fair market, because there's a good chance you're going to find yourself chasing it to a price that you never expected to have to go. If you want more information around this, please, I can talk for hours on this one topic. Reach out, and any of our Redline agents have been coached around this as well. Okay, now for the greater Calgarian. What does all this mean? Why should I even bother listening to you, Darren, week after week or month after month? Being an owner in this market, not looking to trade up or trade down or anything like this, all signs are pointing to a flat market still this year. No real upside coming by the looks of it, but no real concern around what I call equity erosion. So don't stress about things, watch the headlines, tune in, but these are very subtle changes month after month, and on a macro scale, we're not looking to see a lot of tweaks. So that's enough about that. Now, a couple things I'd like to hit on around. So Calgary's broken down, guys and gals, into 8 districts, and then there's 4 different property types. And things change a ton around the different areas, price points, and obviously market property types that we want to hit on. Now, if I were to highlight a few things that I think you should know, would be around both. I do stats on how the markets and how the areas have done in relation to new listings. So how many sales have transpired in relation to the new listings that have come. And then also, I like to watch, again, the price points. Have we gone up or down based on, again, all of these other, these districts and things like that. So if I look at the detached market segment, they're all performing about the same. It's actually a really, really tight cluster, meaning no matter where in the city, we're seeing about a 50-ish% sell-through, which is just something to be noted. It's pretty rare that we see the whole city kind of at that same pace. So northeast, southeast, west, everything else, we're all about the same. We're all in about the same boat when it comes to new listings selling in relation to the inventory on. What else did I want to talk to you guys about? Yeah, so there's some very specific inventory, data that we can jump into on this, but I don't think today is probably the best place to go through it. If you are interested in more information, the apartment segment's got a few neat things going on that is interest. But the good thing to know about the apartment market that I'm really happy to see, because it's, again, been beat up for a long time, is this. From last month to this month, we've seen an 11% bump in its sell-through. So it went from only selling 36% of the homes that got listed in that month to now up to 55. That's a really good change, right? None of the others are doing that. So good to see. Now, hottest communities. Those are fun for a lot of people to just say, hey, am I in one of these hot communities? And if I'm buying into one, I should probably know as well. But sometimes when you look at this stuff, some communities only have a very small amount of property that trade in a given month. So I kind of pulled out the ones that I thought stuck out to me in a way that, wow, okay, it's doing well for its size, and then people should take note. So a couple of these that are doing really well based on its sales activity, meaning how many sales are happening in relation to its listing inventory that has come on the market. Glendale out in the southwest, doing incredibly well. Cambrian Heights in the northwest, again, doing very well. Crestmont, one of the big pricey areas. Britannia, again, had an incredible sell-through last month. Same thing with Garrison Woods. Again, its average per sale price is fairly high. And then if we're going to talk about some of the rural areas that are still part of the Calgary Real Estate Board, Sundre came out of nowhere and it had a really, really large month. So that's really neat to see. And then lastly, if I were to talk about the hottest communities, it's surrounding months of supply. Meaning, wow, this community doesn't, based on its current activity happening, you're not going to see homes sit on the market for very long. Now that's good for people to know. Obviously, if they're buying into one, they have to act quick, or if they're selling and they want to have good success, this is very important. Again, some of the ones on the hottest other list I gave you will be on this as well. Cambrian Heights sits near the top with a very low months of supply. Charleswood, again, very close to Cambrian, so that neck of the woods. Ramsey, Christie Park, it continues to be a very sought after community, even though its price points are up in the very high. Britannia as well, because of its incredible sell through in January. And then lastly, I have here the lowest months of supply for a tangible community with a reasonable amount of sales is Glendale. So yeah, that's what I have for you guys today. So in light of all of that information, there's so much more to talk about. Again, so if you've got questions, reach out to one of your realtors. You know, I would prefer one of ours here at Redline. They've got this information handy and they know the value of the hyper local understanding. So again, thanks for tuning in. I really look forward to sharing the next months, because that will be a wrap up from Q1. So there'll be a bit of a trend line that we can talk about, and we'll go from there. But thanks again, have a great week, and talk to you very soon.